All right, so how are you guys doing today? My name is Derek Miller. Um, what we're going to talk about today, you guys, is how to legally minimize your taxes and give yourself an instant pay increase without working any overtime. And how we do that, you guys, is by adjusting our W-4 form. Many people don't really understand the W-4 form, probably have not even filled it out in years. According to the IRS, over 100 million people in the United States and 80% of the United States have their W-4 form filled out incorrectly. And we're going to talk a little bit today about how to fill that form out correctly. First thing we want to notice is, or talk about is, how do you know that your form is not filled out correctly or that it's filled out incorrectly? The first thing is if you are getting a refund. So if you are getting a refund, then what that means is there's too much money being taken out of your taxes. Okay, and also if you owe money at the end of the year. So if you owe money, also what that means is you need to adjust your W-4 form. That way you can adjust it to where you don't owe any money. All right. Now, what is a W-4 form and what is it for? What is the purpose? All right. So if you look right here at the top of the form, I'm going to make this a little bit bigger if I can here. Let's see. Right here at the top of the form, it says purpose. The purpose of a W-4 form: to complete Form W-4 so that your employer can withhold the correct federal income tax from your pay. Consider completing a new form, a W-4 form, each year and when your personal or financial situations change. All right, so let's go ahead and take this back down a little bit here so we can see the whole thing. All right, so how do we fill out this form? So most of the time when people get their form, they'll see this first page right here. This is the first page of the W-4 form. It's actually 2 pages. Most people don't even know that there's actually a second page to the form, because all your job normally does is give you this first page. Not to call anybody out or anything like that. It's not that, they don't want you guys to know that there's a second page. They just, 9 out of 10, most people don't use the second page, so they only give you guys the first page. But this is the first page and how it looks. So you might remember filling one of these out before. So let's get into it. So the first part of the form is right here at A, and it says that you should enter 1 for yourself if no one else can claim you as a dependent. So that's the one that people normally mark. They mark the 1 right here for themselves, because if nobody's claiming you as a dependent and you're working, so you're claiming yourself. And the second one says B. It says enter 1 if you are single and have only 1 job, or you are married, have only 1 job, and your spouse does not work, or your wages from a second job or your spouse's wages or the total of both are $1,500 or less. This is where a lot of people fall short, whether they're single or whether they're married. And the reason why I say they fall short on this one is because normally they'll say, no, they'll say, okay, well, it's only me, so I don't have anybody else I can claim, and I'm working, so I can just claim myself. Well, right here it says if you are single and have only 1 job, then you can enter another 1 right here. So instead of having 1 on your W-4, that's your 2 right there. And also, if you were married and your spouse is either out of work, or your spouse is not making over $1,500 or more, then you would be able to claim your spouse as well. So if you were single, you'd have 1 here on A and 1 here on B. Now, if you were married, you would have 1 here on A. And if your spouse was working, we go down here to C, and it says enter 1 for your spouse. But if you choose to enter 0, if you are married and have either a working spouse or more than 1 job, entering 0 may help you avoid having too little tax withheld. Okay, so here's the thing. If you are married and your spouse does work, this is what you got to take into consideration. If you are having too much taxes taken out right now, then you would want to put 1 on there in order to get those taxes not taken out of your paycheck. Now, if you are on the opposite end of that and you don't have enough or you don't have enough taxes taken out of your paycheck, then you want to leave that as 0. Okay. All right. So we go down here to D. It says enter number of dependents, whether it's somebody you're taking care of that lives with you, or your children, things like that. You want to enter that number on there. And E says enter 1 if you will file head of household on your tax return. See conditions under head of household. Head of household basically goes to anybody that you're supporting. If they're staying with you and they're not making over a certain amount of money, you would want to check that. Like I said, under head of household, you want to check that. If they're not making over a certain amount of money, then you will be able to claim them as head of household if they're staying with you throughout the duration of the year. Also, it says enter 1 if you have at least 2,000. This is for F. Enter 1 if you have at least 2,000 of child or dependent care expenses for which you plan to claim a credit for. Note: do not include child support payments. See Pub 503 child and dependent care expenses for details. So this right here is enter in 1 if you have at least $2,000 of any kind of child or dependent care expenses. And also G says child tax credit, including additional child tax credit. See Pub 972 child tax credit for more information. If your total income will be less than $65,000, $100,000 if married, enter 2 for each eligible child. Then less 1 if you have 2 to 4 eligible children, or less 2 if you have 5 or more eligible children. If your total income will be between $65,000 to $84,000, or $100,000 to $119,000 if married, enter 1 for each eligible child. So what you want to do, most time what we tell people is that if you got the child tax credit last year, you would want to just check with that on your taxes from the previous year. And if you got it last year, then most likely you're going to get it again this year, so you will be able to take that. But you want to check with that, check that paperwork, and also check with your tax professional as well before you make the decision to mark that on there. And what you'll do here on H is you add lines A through G and enter the total here. So you add all these lines up, A through G, enter right here on H. All right. Now, here's the thing that a lot of people don't get into. It says, for accuracy, complete all worksheets that apply. If you plan to itemize or claim adjustments to income and want to reduce your withholding, see the deductions and adjustments worksheets on page 2. All right, so we're going to scroll down here, and we're going to go to page 2. Here is page 2. All right, so page 2, deductions and adjustments worksheet. Note: use this worksheet only if you plan to itemize deductions or claim certain credits or adjustments to income. Excuse me. Now, number 1 says enter an estimate of your 2015 itemized deductions. These include qualifying home mortgage interest, charitable contributions, state and local taxes, medical expenses in excess of 10%, 7.5% of either you or your spouse were born before January the 2nd, 1951, of your income and miscellaneous deductions. For 2015, if you may have to reduce your itemized deductions if your income is over $309,900 and you are married, filing jointly, or a qualified widow. $284,050 if you are head of household, $258,250 if you are single and not head of household or a qualifying widow, $154,950 if you are married, filing separately. See Pub 505 for details. Okay, so if you guys are itemizing on your taxes. That if you're claiming your mortgage and all those different things, if you're doing the Schedule A where you itemize, then you would want to, put whatever your estimated deductions are here on line 1. And then based on if you're filing married jointly or head of household or single or married, you would want to deduct that number, whether $12,600, $9,250, or $6,300 from number 1. So it says subtract line 2 from 1, and that will give you, line 3. And here on line 4 is where everybody comes in. So on line 4 it says enter an estimate of your 2015 adjustments to income and any additional standard deductions. See Pub 505. So if you guys have made any adjustments to your income, this is where owning a home-based business comes in. And this is what makes owning a home-based business so great, is because you can take advantage of these adjustments. So what you want to do is you'll enter in here on line 4 the amount of adjustments that you are taking for the year, or estimated amount for 2015. And then you want, for 5, it says you want to add lines 3 and 4 and enter the total. So you want to include any amount for credits from the converting credits to withholding allowances from 2015 from W4 worksheet in Pub 505, and you want to enter those right on 5. Then you want to enter an estimate of your 2015 non-wage income, such as any dividends or interest. If you guys are invested in anything and you're getting dividends through that's been paid out to you, or interest from capital gains throughout the year, you want to enter that on line 6. And subtract line 6 from 5, and 0 or less, enter 0. So you're going to subtract line 6 from 5. It's going to give you line number 7. And then you want to divide the amount on line 7 by 4,000 and enter the result here. And you want to drop any fraction. So say if you get, 4.3 or whatever, 4.5, you just want to drop that fraction and leave it at whatever that whole number is. And then that will give you the number 9, which is the end of the number of your personal allowances worksheet. Well, number 8, which is what you'll get from the number of allowances you'll get from making these subtractions and deductions or whatever here. Which also, what you're gonna do on line 9 is enter the number of personal allowances from the worksheet from the front, which was on line H on the first page. And then it's gonna give you your total number of allowances here down on line 10, which will be what you will actually put if we go back up to the bottom of line 1, what you will actually put here on line 5. So instead of it being either 1 or 2, instead of being like 1 or 2 if you're single, down here it would be the 1 or 2 that you have on line H, plus the adding of what you have on line 8 on the second page here on line 5, which will give you your total amount of exemptions that are allowances that you were able to claim. Now, the more allowances that you have to claim, the more it lowers your taxable income, and the more it basically gives you more money in your check throughout the year. So, because basically what that's doing is telling your employer how much money to actually take out of your check, or how much money to actually leave in your check throughout the year. Most people are paying anywhere from $300 to $500 a month or more in taxes each month. And what we found with me and my wife is that she was actually paying a little bit more than that, and we was actually able to get back a little over $300 to $500 a month back in her check, which basically helped us be able to pay on debt, and when we got out of debt, allows us to be able to start our investment fund and be able to invest and use that money. And the IRS are actually, if you go to the IRS website, it actually tells you that the IRS does not pay interest on the money that they take out of your check, and that you would be better off taking that money yourself and putting it into an account that would actually give you some interest as well. All right. So guys, basically that's the W4 right there in a nutshell. If you guys have any other questions or anything that you need to ask, that you want to ask about, my website is www.djmfinancialsuccess.myecon.net. And also my number is 404-721-5771. You could always give me a call or go to my website, check out our website. We have a lot of great information on the website as well. But once again, my name is Derek James Miller, and it was a pleasure to share this information with you guys. I hope it was beneficial. I know that, actually, I know it's beneficial, guys, and I hope it does the great things for you that it's done for me and my family. And I hope to talk to you guys soon. Have a good one.